Hello, everybody. Welcome to week 2 of BLCN 533 Finance and Blockchain. I'm Dr. Michael Tabone. So, this week we have the readings are going to be non strategy, so non MSTR companies that hold Bitcoin in their balance sheet. So, we're going to be looking at those. I want you to keep in your mind the journal entry for next week, which is an informal journal entry. So, you're going to pick your pitch. So, you're going to pick what financial application for the company that you hypothetically work for, and what are you going to pitch to the CFO? There's a whole bunch of different ones you could pick from, or you can come up with a different idea. Something to do with what is your way of incorporating blockchain into the financial structure of the company that you're talking to? What instrument are you going to plan on using? Is it a token for the company itself, or a coin for the company itself to have some kind of cash flows? Is it some kind of a product that the company is going to have that involves the blockchain in a way that the finance can be able to utilize it correctly? Is it a treasury allocation? Look through the list of the potential opportunities that are there for the paper. If you have a different one, just write it in the thing. We'll have a discussion about it in the journal. And that's it. Just an informal way of going about it. You can provide some research if you'd like to point that way. I'm not necessarily looking for research, but follow the directions. And that's for next week. There are labs. I will send out a thing on the labs and the announcements on how to go about it. All you have to do is reach out to the bookstore through the link and ask, say you're part of the class, ask for a access code, go to the link, sign in, boom. The bookstore will send it to you. You have to request it though, and you should request it as soon as possible. So this is week 2 and this is coming out. I would ask for week 2, set it all up, have it be all set. You go from there. So let's go over the readings. You have strategies, which is MSTR's 10Q and investor letter. So I would suggest that you search on there for the latest and greatest for that. Um, comparator corporate filings that are out there. Okay. And I will send out some links to some things maybe you should read as something to look at. This week is the responses to your rounds from last week in your DAR discussions and the analytical analysis number 2 paper. So we move away from the analytical framework to corporate decisions to evaluate what the actual Bitcoin treasury allocations are being, how they're actually being filed for real financial disclosure. So this is very telling. This should tell us about the regulatory landscape, right? It should tell us about how strategy is applying this in accounting reasons. What if accounting rules that currently exist versus what they exist in the future? And it's a unit of analysis for this particular company. Keep that in mind, not for Bitcoin itself. Simply because strategy at the time of this recording owns around 1% uh, of the supply of the circulating supply of Bitcoin doesn't mean that they are Bitcoin itself. They are just holding it. Just like if Fort Knox is just holding gold, they are not gold itself, right? They're just a place that stores gold. In this particular case, Strategy is a company that is owning a large portion of Bitcoin. It is not Bitcoin itself. This is important to keep in mind. It may have ancillary effects on Bitcoin, but it's not Bitcoin itself. So, what is a the financial mindset, right? The finance person, or the financial way of utilizing Bitcoin treasury asset, your goal is to preserve capital, maintain liquidity, generate risk adjusted returns on assets that are not immediately deployed in operations. So, what you could do instead of buying into something like Bitcoin or some other digital asset is you would go buy T bills, money market funds, short duration investment grade bonds, commercial paper, something like this. But Bitcoin shares none of these properties. It on a fiat level, it is volatile. It has um, an unpredictable return. We don't know what the CARG is year after year after year. We know what it has been to this date. We don't know what it's going to be in the future. And there are regulatory treatments of Bitcoin that matter to a company, but don't necessarily matter if you're on an individual level. So, especially if you're a public company, they matter tremendously. These waves and shocks could really hurt you. But even on a private company, um, these regulatory treatments are important because you exist as a corporation because you're recognized by a state, by a government. So you have to meet their requirements, and regulations is one of them. And it's one of the easiest ways for something to come after you because you were incorporated in a state that you didn't follow the rules, and therefore, boom, right? It's easy to come after you because you didn't follow the regulatory landscape out in the world. So cash itself has been the conventional treasury instrument, and it is dominated, is denominated in fiat. And fiat means that by decree, so by government, the government says that you have to pay me in this fiat of taxes, this tax, this currency, and therefore it is valuable because you have to pay me in that currency. So the demand for that currency goes up, and therefore it has some kind of demand on the market. It has some kind of value, but they do it by fiat. No one decided that a dollar bill was going to have some kind of thing. It was told to you by coercive force, and by coercive force I mean eventually there's a person with a gun pointed at the end of that sentence. You're going to say to me, "No, Michael, no, Dr. Tabone. It's there's fines, and then there's this. At the end of the day, it's imprisonment and or death because you didn't pay your taxes, right?" So there's coercive force in the use of fiat currency always. Now, something to keep in mind, that's at the end of the day, right? Paul Krugman said fiat is backed by men with guns. And that's basically what it means. Wasn't my saying. It's Dr. Paul Krugman, the Keynesian, not me. Anyway, nominal returns are negative in real terms when measured against broad monetary expansion. What that means is if the money supply is growing at a 26% rate per year and you're only able to have returns from your investments of 20%, you have 6% of inflationary risk, right? You're not able to inflate to grow at the same exact rate of inflation, and therefore the purchasing power of the things that you're earning are not keeping up with inflation. So if your earnings, even if you might feel this on an individual level, if your earnings per year, if you're only getting a 2% raise, and meanwhile inflation is at 10%, you know, everything around you is costing more. Your purchasing power only goes up this much. Meanwhile, the what you need to spend money on goes up this much. Well, this is a huge problem, right? Companies have the same exact problem as well, where even if their margins are pretty high, even if all of that is going on, the debasement of the actual underlying currency is also something they have to keep up with. So it's not just keeping up with the Joneses, it's also keeping up with inflation itself. So some of these corporations that exist out in the world that say, "Hey, I want to put some of my assets, some of my treasury into Bitcoin." The idea is to hedge against this inflationary pressure and to keep some kind of as a deflationary asset to keep some kind of purchasing power is moves into the future. A lot of these companies are looking for a long-term hold, and they're looking for this in the future, 2030. And this might be different than my own individual take on the owning of Bitcoin, right? As an individual, I would say you never sell Bitcoin as Bitcoin Maxi Plus kind of guy. But as a company, you cannot be locked into the same idea. Your job is to return investment dollars, fiat dollars. Uh, that's what your job is mostly in the finance world. So from a corporate strategy thing, I put in Bitcoin now to get more fiat in the future. And the future might be way in the future, 5, 10, 15 years. And I'm going to hedge against just pure monetary debasement. So that's the idea behind what they're doing. What strategy has done is delivered several different mechanisms, several different types of layers to this, right? So there's convertible notes, there's preferred stock series issued explicitly to fund Bitcoin purchases under a different one. There are different layers, and I'll post some information as we go through the week on that. There is the MNAV multiplier that exists out there, and I will have a entire article posted on this out there itself, right? And when the MNAV premium is high, new equity or debt issues result in accretive Bitcoin acquisition per diluted share. So there are diluted shares out there of MicroStrategy, which is your preferred A stock. Those preferred A stocks get diluted as more of those are issued. There's also other stocks that are issued to take out loans, and strategy stacks these accretiveness through its Bitcoin yield metric. And there is a lot of controversy if that's the correct, if that's where the Bitcoin yield should be, or if it should be on the actual stock of the company. It's a long and serious debate. This is kind of the stuff that I want to talk about with you as the class should be talking about as we move on here. So sometimes there's a premium to buy to buy MSTR. Sometimes it's not. If it goes down to negative below the value of Bitcoin on the market, it might be a good time to buy, or maybe it's not a good time to buy. See, Bitcoin, it becomes a proxy of the price itself of Bitcoin. The only thing is, strategy also has an income stream because of its base company product. So it's selling products. It's AI SaaS product out there making money, so it has some kind of income. It also has income through this other financial instrument. It has two different things going on. So, but valuating MSTR simply on its Bitcoin holdings might be a problem, but it might be a good thing. It all depends on how you're looking at stuff. If you're an investor, do you want to buy it when the MNAV is lower? That's bad. It could have a catastrophic effect. Things are moving in momentum. So your company might be strong fundamentals in other ways and then be negatively impacted by its holdings in another simply because you're known as that. Now, MicroStrategy might be the most volatile when it comes to this kind of swing of asset things because it's out there in front. There are other companies that own some Bitcoin, and they're not as in the head of investors on the market, and they don't get as much volatile swings as MicroStrategy does. When Bitcoin goes higher, the tendency is that MicroStrategy goes higher, way higher than that particular movement in Bitcoin. And if it goes lower, the lowness seems to go lower than the low move in Bitcoin. So Bitcoin might gain 2,000, and MicroStrategy's goes up a series of percentages more than that 2,000, right? If that 2,000 is 2%, then MicroStrategy goes up 8%. And then if that move goes down 2%, MicroStrategy goes down 8%, right? But it doesn't always stay there. The movements seem to be very emotional as we move along through that. So that's something that could happen if your argument is pro Bitcoin on the balance sheet. But again, it might be mitigated also by the fact that your company is holding only a certain amount on the balance sheet. Something to think about. Financial implications of a allocated decision. So the fair value, whatever's on the market, let's say a $500 million Bitcoin position with a 30% price decline generates 150 million income statement loss for the quarter. That could have some serious impact on your company. So for companies with thin operating margin, that volatility can obscure underlying business performance. So if your margin is very small, and then all of a sudden your company declines from the 500 million to $150 million in the balance sheet. You lose $150 million in your balance sheet. It might look like your company's even headed farther into the deep waters, which it'll never come out of. But could that capital that you allocated towards Bitcoin, should it be in something else? Should it be reducing debt? Should it be given out in dividends or buybacks, or should you sell some to be able to cover that loss, the debt, some kind of other capital allocation? You've also now sold it at a loss now, just to go to something else. So you just keep investing in lower. You're not the smart money anymore. You're the dumb money that now has bought high and just sold low. Or is it better just to hold it for a long period of time, like the original idea was? Okay. And companies that borrow to fund Bitcoin purchases add leverage, and sustained price declines amplifies this leverage. So yes, you can buy more with a um, leveraged position, but of course that opens you up to more risk. So these are the things to think of. Now you have to apply tokenomics to your treasury decision. With Bitcoin, you know that's a fixed supply of 21 million coins, and you know the new instances are on a predetermined and immutable halving schedule. Every 4 years, you're going to get this. You know now that 20 million plus coins are already out in the world. You know that they're circulating around, and you know that less than 1% has yet to be mined. So that's where we're at. So majority of them are out in the world right now. And that no single entity controls Bitcoin. Changes to the consensus would have to include all users, node operators, miners, holders, everyone. Institutional treasury demands are the highest they've ever been. ETF flows in and out are all by market, but they're out there, and they're out there for high net worth individuals and low end. Everybody can invest in that. And that also helps because now you don't have to know anything about the educational aspect of Bitcoin. You can just have access or some kind of exposure to Bitcoin through your normal channels. So for companies, they don't have to actually hold Bitcoin on their treasury. Actually, hold the metal now. Seed phrases. You now can do this through the normal phrases, normal ways that you normally would, owning it through a stock, talking to Coinbase for custody. This is great, right? This is a great way to not have to explain to grandma how the internet works again, right? Um, so so according to Smith, the strategic question is not how the technology works, but what it changes about how we manage capital. Okay, so adopting too early without risk frameworks, custody and governance exposes the company to volatility and to potentially changing, affecting your damaging reputation on the market. But dismissing this asset class entirely may also leave you open to being left in the dust, right? Having less returns than you potentially make. Okay. So that's why in this week, we're evaluating specific companies' actual decisions, MSTR's actual decisions, and maybe taking the lessons learned. And they are pioneering something. They're taking a sword and cutting their way through the jungle here. And we have to look at what they're doing, and they're going to make mistakes. They're going to have issues. Timing's not necessarily going to be the best, but we can always use them as a great way to understand and learn. So I always take that as a thing. So again, next week is the stable coins and corporate payments. So we're going to concentrate on, and we're going to work from Treasury Reserve to operational payment infrastructure. That's what we're going to switch into. And again, pick your journal is next week. So pick your pitch. And that's what's going to be for your CFO capstone. Your CFO capstone has two basic parts. The last DAR posting is going to be your video of you making the pitch, and then all of your data and all of your research is going to be in the paper. So your pitch is actually going to be presented to all of the other people in the class, and then they're going to basically poke holes in your week in week 8, right? So 7, you post it. In week 7 and 8, we post back and forth with each other because it's a short week for week 8. And then your actual documentation is your paper with all the research in it. So they're going to be kind of seen as one document or one kind of project together. So it should be really interesting. Should be fun. So again, this should be a fun exercise as we go forward. My email is michael.tabone@ucumberlands.edu.